Hi everyone and welcome to today's More Report on Thursday the 26th of May with me, Richard Perry, market analyst at Handtech Markets. The European session is fairly mixed to slightly positive, although the sentiment on Forex markets is sort of, as I said, sort of mildly dollar weaker, but pretty much mixed really. It's not really too much in terms of direction. You can see that the Treasury yields have just started to just come off the top a little bit potentially on the 2-year. And the 10-year still sort of basically moving sideways. You've got a couple of really key economic data points in the next couple of days. You've got durable goods and the second reading of US GDP, and that comes ahead of Janet Yellen speaking tomorrow night at 6:15 UK time. And that Janet Yellen speech could be crucial, really, to monetary policy for the coming days and weeks, really, because she has, I think, the power to really confirm or deny whether we're going to get a June-July rate hike or not. So I think the market will be sort of poring over every word that she says. Now, in terms of the dollar, we've seen a slight sort of rolling over, as we have on the yields. We've seen the similar move on the dollar as well, just slightly rolling over, and that is sort of impacting through the forex majors. And it's interesting that we're seeing equity markets fairly positive actually in the last few days, really breaking higher and looking positive. And again, the European markets are positive, even though we didn't really get too much direction out of the Asian trade. There was a weaker Tankan survey out of Japan, and also the yen was stronger, so that sort of curtailed a little bit of the positivity for the Asian markets. But still, the Europeans are still holding on to these moves. We're still getting the oil price, which is pushing higher. Brent crude hit $50 today, 50.17 at the moment, breaking out, and WTI also is pushing ever higher towards that 50 level, and also that key October high of 50.92. So that is certainly positive for the equity markets, but it's interesting that we're seeing the dollar slightly correcting today. Nothing too significant yet, but coming in front of that data this afternoon and tomorrow as well. So what else have we got to look forward to today? Well, if I can find it. Where's the data there? There's the data. We've got, first of all, UK GDP at 9:30. Expected to. This is the second reading of last quarter, 0.5. But the first reading of this course of the Q1 was 0.4, and it's expected to come in line with that. And be interesting to see what happens in terms of whether we get a revised move higher or not. It doesn't look likely, but still that could well help to drive sterling today. Now also we've got the weekly jobless claims at 1:30 this afternoon. That's 275,000 is the expectation there. But more importantly than that, we've got the durable goods orders now. That's expected to come in month on month on the core basis, which is the ex-transport. That's expected to come in at plus 0.3%. So it's a slight improvement on last month, or certainly the last couple of months really. And that could help to stabilise the dollar. Also today we've got the pending home sales, which are expected to come in at plus 0.6% on the month. So what we got to look forward to in terms of the chart of the day, which is the DAX. Now I've been talking about the equity markets just earlier, and this DAX move higher has sort of broken through a key level. It's similar sort of move on the FTSE, because FTSE breaking above 6,200 was a key near-term move. The DAX breaking back above 10,120, which was a pivot line. Breaking back yesterday, gapped higher yesterday at the open, and then continued and closed higher. So that is a breakout move. And not only that, we've got a continuation of the move today, up 0.5%. So it looks pretty positive actually for a continued retracement back towards the 50% fib level, 10,373, and that sort of marks where we start to see the next key overhead resistance, sort of around that sort of level up towards 10,475, which was the April high. So it certainly looks at the moment like we're seeing a positive move on the DAX. The momentum indicators are looking decent, aren't they? RSI picking up back towards 60, the stochastics accelerating higher, that looks positive, and on the hourly chart we still see that improvement going. Now you've got a minor potential for a bit of overbought momentum, which could sort of induce a little bit of a near-term pullback. Although pretty much all the hourly momentum indicators are still strong, so I wouldn't necessarily say that it's going to happen, because at the moment it looks like it's in a nice bull phase at the moment. So it doesn't. You basically sort of start to play the RSI as an overbought, oversold indicator when you're in a sort of in a ranging market, but when it's in a breakout mode like the DAX looks to be at the moment, you pretty much would go with that. But I think any near-term weakness, I think you've got a sort of a reaction low at 10.175 from yesterday, and that sort of protects yesterday's traded low at 10.130, which is again around about that sort of breakout level of 10.120. So the DAX looks pretty strong, and it looks like it's going to be testing further higher, and I think little near-term corrections are a chance to buy. So I wish you good luck in your trading on the DAX, and I will speak to you later. Thank you.